Joining us now from New York is Fox Business Network anchor and financial analyst Eric Bolling. And Eric, thanks so much for being here.
Well, thanks for having me, Kathleen.
Well, the U.S. appears to be working itself out of the debt ceiling crisis, although the ratings agencies could still downgrade the country's AAA ratings. Are we just kicking the can down the road, or did the debt ceiling deal open the door to lasting change to the U.S. economy?
Well, we're definitely kicking the can down the road. Let me address that first part of it, the rating agencies. I've done my show, and I've been on record as saying that I think the rating agencies are doing America a disservice here, especially Moody's. Moody's came in before this vote on the debt ceiling raise. Moody's came in and sat down with GOP freshmen. Now, who are the GOP freshmen, Congress people? They're typically the Tea Party. A lot of those are represented by the Tea Party. My problem here is that they went and they sat down behind closed doors, pressuring them to go along with a debt ceiling rise. How did it play out? Turns out after the Boehner 1 became Boehner 2, sent over to the Senate and came back to these freshmen, half of them turned around and voted to raise the debt ceiling, that going against everything that the Tea Party stands for. So I think Moody's, what they've done has really pushed those people into an area that they didn't need to be or probably didn't want to be. I, for one, believe that we weren't going to default on any debt. We spend about $29 billion servicing our debt per month. We take in $173 billion per month in revenue and fees. So the debt was going to be serviced. We were never going to get downgraded. Default is that funny term. Really, would we have defaulted? Probably not. We probably would have paid our debt. We'd have paid the military. We'd have taken care of Social Security, Medicare, Medicaid. And a few other of our important bills first, and some of the other things, the Department of Education, some of the other areas that we frankly overspend, they may not have been paid right away, but down the road they would have been paid. What we really needed to do was address the spending side of it.
Now, Eric, if we are downgraded, what happens then to the economy? And is the U.S. on its way to becoming another Greece?
I don't think so. I don't think we're going to get downgraded, but let's just play the game and say if we are. The problem is we're the most important nation. We're the most solvent nation. Believe it or not, we're $14 trillion in the hole. We still are able to pay that debt. Look what happened. Look what happened when Boehner 1 looked like it was going to fail that last Thursday night. Remember, it was into the evening. They were delayed. It looked like it wasn't going to pass. Everyone thought we were going to get downgraded. People were going to, there's going to be pandemonium, debt-a-geddon happening on Friday. Turns out Friday, investors from around the world came and bought American debt. They bought American debt, which means they drove interest rates down. So this argument of we needed to raise the debt ceiling so we didn't default or get downgraded is frankly disingenuous at the very best and an outright bold-faced lie from the administration at the worst.
Now, many on the left are saying that President Obama is moving further and further to the right in terms of economic policy, especially in light of terms surrounding the debt ceiling where he agreed to no revenue hikes. Do you agree with that assumption?
Not at all. I think it's a game that's being played right now. Remember what we have now. Now we have the debt ceiling that's going to raise around $2.5 trillion, and it's all going to be based on a 12-member panel, 6 Congress people, 6 senators, 3 from each side in each department. So in other words, there's going to be 6 on the left. There are going to be 6 liberals on the left who are going to dictate how we make our cuts going forward. This is very important because if Mr. Obama is now going to pander to the far left, which he's ignored in the ceiling crisis so far, he can actually help put in some very, very liberal members onto that panel. We could see gridlock when we need to figure out how we're going to make these spending cuts. And as you know, if we don't come to an agreement on the spending cuts, the military is going to assume half of the responsibility of the spending cuts going forward. That doesn't sound anything like a president moving to the right. So until I see who's put on these panels, I'll let you know how I feel about Mr. Obama and whether he's moving to the center or not.
Okay, well, Eric, some economists are saying that for the economy to improve, demand must pick up via increased employment. If cash-packed companies are not hiring, is there anything that the government should do to lower unemployment?
They could cut taxes. I mean, that's simply the only way. This whole overhang of whether Bush tax cuts expire or tax rates going forward, The only way to solve the unemployment problem is to clarify the economic environment going forward. And that means we need to know not a year down the road or a year and a half down the road. We need to know 5 and 10-year windows down the road what our taxes are going to be like. Repeal Obamacare. Get rid of that. I was sitting on the beach with a friend of mine who works for one of the biggest investment houses on Wall Street. They've already been notified that they're going to default on their healthcare, Obamacare obligation and pay the fine. They've already told their members they're going to be paying the fine and they should go out and try and figure out their own health care. That's what we're going to see. So businesses are worried about Obamacare. They're worried about health care. And the third one, absolutely concerned about a $4 gallon of gasoline and what that's going to do for demand. They really need to start bringing the price of fuel down, not higher. Remember when Mr. Obama took over, $1.83 was the gallon price on the pump, and now it's pushing $4 a gallon. Going in the wrong direction. They need to clarify those three before businesses really are going to start to hire again.
Now, you touched on tax cuts. Do you see Obama extending the tax cuts for the wealthy? And if not, what does that mean for the U.S. economy?
That would be trouble. I mean, because small businesses create most of the 70% of the jobs. We all know that the number's been thrown out a bunch. But that's for real. We interview a lot of small businesses on my shows. And unequivocally across the board, they're saying we're trying to do more with fewer people. That's because they don't know what's going forward with their tax structure. If they need 2 people, they'll hire 1. If they need 4 people, they'll hire 2, because they don't know what their tax burden is going to look like going forward. It needs to be clarified. It needs to be simplified. And it really needs to be made, if not permanent, at least a long look into the future, not just whether they're going to expire at the end of this year or not.
Right. Well, Federal Reserve officials say that they have no plans for a third round of quantitative easing, but they won't rule it out either. What would a QE3 mean for the economy?
Right. QE3, 4, 5, 6. Ben Bernanke, frankly, he probably can't even count that high. They're more than willing to go ahead and continue to try and stimulate the economy through quantitative easing, flooding the economy and the market with cheap dollars. All it does is it drives the price of things that we have to buy up. Now, the left will tell you that, no, prices aren't going up. Look at the inflation numbers. The problem with the inflation numbers is they exclude food and energy. The consumer price index excludes food and energy. Well, guess what's been skyrocketing over the last year and a half, 2 years? Food and energy. I just talked about the gallon of gas exploding. Food prices are off the charts. We're up 30% in meat prices. We're up 27% in some of the produce prices. To get a tomato from the West Coast to the East Coast, it costs more for the water. It costs more for the fuel to truck it over. Prices are expanding in the 2 most important parts, food and energy, but all that more quantitative easing will do will drive the prices of the things we demand up. It won't do a thing for our housing prices. Those are still on their ear, and that's the reason why inflation doesn't look bad, because the home prices are such a drag on the big picture. It makes all these high prices look okay because this price is low.
Now, Eric, I know that you're big on commodities, but now that the U.S. debt ceiling is resolved for now and Greece has settled for the time being, do you think there will be a demand for safe haven commodities such as gold? Or will that demand continue, or do you see it easing a bit?
No, I don't think we've done anything. Look, I did a whole thing on Fox Business and Fox News Network where I came out and I held up an ounce of gold. It was October 1st of 2007. I said, this is where you have to be, because the financial waters going forward are murky, to say the least. We had a big financial downturn, big collapse of the economy. Gold went from $610 an ounce. It's now 600, whatever, mid-1600s, I'm sorry. Look, this gold price will go up to $2,000, $3,000 going forward, but it may blip down because everyone thinks, wow, we're going to breathe a sigh of relief because of the debt crisis is averted for now. But we haven't changed anything. We're still outspending what we take in. Our revenues are X and our expenses are X times 1.5. If you continue to do that, you're just going to keep hitting the debt ceiling, hitting the debt ceiling, hitting the debt ceiling, and prices for commodities like gold, like oil, even physical commodities, food commodities, agricultural commodities, clothing commodities, cotton, they'll continue to go up.
Eric, last question real quickly. Economic growth in the first half of the year has fallen below expectations. Do you see the economy gaining steam in the second half? And if not, what is that going to mean for commodities such as oil and natural gas and gold?
Well, I think oil is really dependent on that number. The GDP number for the first quarter was revised from a 1.9 down to almost no growth whatsoever. We also saw the second quarter come in at well below what we should be recovering at coming out of a recession. Technically, we're still in a recession. Maybe not by the Harvard economist's definition of 2 quarters of negative growth, but ask the 9.2% of America, 14.5 million people who are out of work, whether we're in a recession. Ask the people who are struggling, 50 million Americans on food stamps, whether we're in a recession. We're in a recession. We're not growing. We're not growing our way out of it. I think if and again, I'm going to go back to it, but if the Tea Party, the fiscal conservatives, take over the Senate, and it really doesn't matter what happens in the White House then, but if they do in 2012, and lead us to a path of smaller government, smaller spending, where we don't outspend what we take in as revenue, that's the only way that America will get back on its feet and start to grow again and start to hire again. But it's going to take, again, another important election in 2012.
All right, Fox Business Network anchor Eric Bolling, thanks so much for being here. So great to have you on Newsmax TV.
Thank you, Newsmax.